What if I told you that real-world assets, like real estate, stocks, and even fine art, could be tokenized and traded just like cryptocurrencies? And what if I told you that one blockchain is leading this revolution? That's right, Ethereum is the undisputed king of real-world asset tokenization. But why? What makes Ethereum the best choice for institutions and investors alike? Stick around, because in this video, we're diving deep into Ethereum's first-mover advantage, its unmatched security, its ESG-friendly proof-of-stake model, and how its DeFi ecosystem is fueling the next financial revolution. Why has Ethereum underperformed? Ethereum's lackluster performance compared to its peers is not without reason. One of the biggest challenges it faces is poor user experience. Transacting on Ethereum is often compared to riding in a limousine, prestigious and filled with high-end features, but stuck in heavy traffic and charging an exorbitant premium for the ride. High gas fees and slow transaction speeds have made it impractical for the average user, creating significant barriers to adoption. To address these issues, Ethereum has introduced a variety of Layer 2 solutions, such as optimistic rollups and zero-acknowledge proofs, ZKPS. These technologies are designed to enhance Ethereum's scalability and reduce costs. However, this has also led to another problem: increased complexity. Ethereum has become a far more complicated ecosystem, making it difficult for new users to understand and navigate. Another major reason behind Ethereum's struggles is growing competition from alternative Layer 1 blockchains, particularly Solana. Unlike Ethereum, Solana offers faster transactions, lower fees, and a simpler user experience. These advantages have not only attracted new users, but have also drawn talented developers away from Ethereum. In fact, last year, Solana onboarded more new developers than Ethereum for the first time in history, although Ethereum still retains the largest developer community overall. Perhaps the most significant factor contributing to Ethereum's underperformance is its lack of a clear investment narrative. Bitcoin, for instance, is widely recognized as digital gold, a simple and powerful narrative that has helped institutional investors embrace it. The success of US spot Bitcoin ETFs is a testament to how compelling this narrative is. On the other hand, Ethereum's branding as the global virtual computer powering DeFi and smart contracts is not as easy to grasp for the average investor. Ethereum's strengths and why it still leads the market. Despite these challenges, Ethereum remains a market leader for good reasons. It is the most robust smart contract platform in crypto, offering unmatched security and decentralization among Layer 1 blockchains. While Bitcoin is the most decentralized blockchain overall, Ethereum is the most decentralized smart contract platform, which gives it a significant advantage in many areas, particularly tokenized real-world assets. This is where Etherealized comes into the picture. This newly launched institutional marketing firm is working to position Ethereum as the go-to blockchain for tokenizing real-world assets, which could lead to significant institutional adoption. What is Etherealized? Etherealized is a new institutional marketing and development firm that launched in January 2000 and co-founded by the Ethereum Foundation and Ethereum's co-founder Vitalik Buterin. The firm's primary mission is to drive institutional adoption of Ethereum by making it the leading blockchain for tokenized RWAs. Etherealized provides a range of institutional-grade products that facilitate asset tokenization, allowing financial institutions to easily integrate their assets into the Ethereum blockchain. Interestingly, the timing of Etherealized launch is worth noting. It came just days after pro-crypto President Trump took office. While this may be a coincidence, it also highlights the growing interest in blockchain technology at the highest levels of finance and politics. Who is behind Etherealized? The success of Etherealized will largely depend on the expertise and connections of its leadership team. The firm is led by VC Raman, a former Wall Street veteran with over a decade of experience in traditional finance. His deep understanding of institutional investors' needs and expectations makes him well-equipped to bridge the gap between traditional finance, DeFi, and decentralized finance, DeFi. Raman is joined by Grant Humer, formerly of Chromatic Capital, and James Fickle, one of Ethereum's earliest investors. Together, they have assembled a team of TradFi experts and Ethereum developers, creating the perfect mix of knowledge and experience to facilitate institutional adoption of Ethereum. In an interview on the Unchained podcast, Rahman revealed that after leaving Wall Street in 2019, he had a chance encounter with key members of the Ethereum Foundation. This meeting changed his perspective on blockchain technology, and he quickly became convinced that he could help bridge the gap between institutional finance and Ethereum. Why institutions are interested in Ethereum. Etherealized's early success suggests that institutions are already interested in Ethereum. Within 24 hours of its launch, it received overwhelming support from Ethereum developers, infrastructure providers, Layer 2 teams, and Wall Street institutions. Many of these firms expressed interest in working with Etherealized to develop Ethereum-based financial products. One of the key takeaways from Etherealized's strategy is that Wall Street has been aware of Ethereum for years. Many large banks are already running private, Ethereum-compatible blockchains behind the scenes. These private chains allow institutions to experiment with smart contracts and tokenization without exposing themselves to the risks of public blockchain. The next logical step for these institutions is to transition from private blockchains to public Ethereum Layer 2 solutions, where they can benefit from greater security, scalability, and efficiency. Etherealized is positioning itself as the ultimate bridge to facilitate this transition. Why Ethereum is the best blockchain for RWAs. Ethereum stands out as the best blockchain for real-world asset RWA tokenization due to its numerous advantages that make it the preferred choice for institutions. One of its greatest strengths is its first-mover advantage. Ethereum was the first blockchain to introduce smart contracts, which are essential for tokenizing assets. This early start has given it a strong network effect, meaning it has already been battle-tested in real-world scenarios and continues to be the dominant platform for decentralized applications. Unlike newer blockchains that often compromise security for speed, Ethereum remains one of the most decentralized and secure smart contract platforms, making it a trustworthy foundation for institutions looking to bring traditional financial assets onto the blockchain. Another significant factor in Ethereum's favor is its environmentally friendly proof-of-stake POS model. After transitioning from proof-of-work POS, Ethereum drastically reduced its energy consumption, making it compliant with environmental, social, and governance (ESG) standards. This is a critical requirement for institutions that need to align with sustainability goals while adopting blockchain technology. Moreover, Ethereum's integration with decentralized finance, DeFi, gives it a major liquidity advantage. Since most DeFi applications and stablecoins are built on Ethereum, financial institutions can seamlessly interact with existing liquidity pools, lending protocols, and other financial products without having to migrate to a different blockchain. Ethereum also leads in standardization for tokenized assets, which is crucial for institutional adoption. Its ERC-20 standard is the foundation for fungible tokens, while ERC-721 enables NFTs and unique digital ownership. More importantly, Ethereum has developed ERC-3000-6443, a specialized standard designed explicitly for tokenized RWAs. This ensures compliance with Know Your Customer (KYC) and Anti-Money Laundering (AML) regulations, making Ethereum highly suitable for regulated financial markets. The potential of tokenized RWAs. The tokenization of real-world assets is expected to be a multi-trillion-dollar industry. Estimates suggest that RWAs could be worth between $4 trillion and $30 trillion by 2030. This could include tokenized stocks, bonds, real estate, fine art, commodities, and intellectual property. By moving these assets on-chain, institutions can unlock greater liquidity, fractional ownership, faster settlement times, and programmable compliance. This is why major financial players like BlackRock, JPMorgan, and Franklin Templeton are already heavily investing in blockchain technology. What this means for Ethereum's price. If Etherealized succeeds in driving institutional adoption of Ethereum, it could lead to a massive increase in demand for ETH. Higher network usage would result in more ETH being burned, making it a deflationary asset, which is extremely bullish for its price. Additionally, growing institutional interest would improve market sentiment, attracting more developers, users, and projects to Ethereum. This would create a positive feedback loop, further strengthening Ethereum's dominance. With trillions of dollars potentially flowing into Ethereum-based tokenized assets, the stage is set for Ethereum's biggest pump yet. If institutions truly begin embracing Ethereum, it could be the catalyst that finally pushes ETH to new all-time highs. Ethereum has proven itself as the ultimate blockchain for real-world asset tokenization. From its battle-tested security and deep liquidity to its industry-leading token standards, it's no surprise that institutions are choosing Ethereum over other blockchains. And with upcoming upgrades set to make it even more scalable and efficient, the future looks incredibly promising. What are your thoughts? Do you think Ethereum will maintain its dominance in RWA tokenization, or will another blockchain rise to challenge it? Drop your opinions in the comments below. Before we wrap up, a quick disclaimer. This video is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Crypto and blockchain investments come with risks, so consult with a financial professional if needed. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss an update on the latest in crypto and blockchain. Thanks for watching, and I'll see you in the next one.